Another day and another low for the Indian rupee. It has touched 54.56 to the dollar today as investors worry about fears of capital outflow and weak equities. The RBI's repeated intervention has failed to prop the currency. Analysts believe that the rupee could slide to 56 to the dollar.
RBI, what it has done, November, December, or now in terms of EFC, these are palliatives. They don't cure a structural problem, which is a huge current account deficit. And while we compare ourselves with other Asian currencies and the problems they face, the fact is that most of them are surplus currencies. Most of them are surplus economies and countries, while we have a huge 4.3% deficit.
Given the type of pressure that is there, and unless India has a certain slice of luck and there is a deeper problem that emerges into the global scenario with Greece maybe finally exiting the euro, etc., etc., there is no doubt that the currency might actually have to go to a 55 or a 56 level. Because what is also clearly sort of being apparent is that the RBI might not be having too much of a firepower at this point in time.
Well, that's the view coming in for the rupee from the experts. They expect 55 to 56 to be touched in case of the Indian rupee. Let's also get in Vijay Bhamwani. He's author, CEO, bsplindia.com, and he joins us in the studios. Vijay, hi, welcome to the show. What's your sense on where the rupee is headed? Further declines in the near term?
I think so, Manisha. I think the USD INR is a buy on dips. And yesterday I talked about a buy close to the 54.30 and a profit target of 54.90 odd levels. Today we are seeing the USD INR having logged 54.69 in the May futures. I would actually feel comfortable buying all over again at 54.40 should I see it tomorrow. I think I would place a stop loss at 54.10 and again attempt to exit close to 54.90, 54.95. I do feel that the Indian currency is likely to remain under pressure because the momentum still seems to be towards long dollar, short rupee.
Vijay, we also have seen the euro make fresh 4-month lows today. I mean, the concerns, of course, there also have continued. What kind of levels would you see onto that one?
Manisha, there again, it's clear that people are favoring the USD as a safe haven, and as long as the sentiment prevails, I think the euro is likely to remain under pressure. I would not really be surprised to see a 0.25% decline from here, although that sounds a little jarring, but I do expect the dollar to remain kind of a safe haven where flight to safety would continue in the coming at least a week, if not longer.
Vijay, what's the sense coming in for other safe haven currencies? Because we've seen Japanese yen continue to decline. The commodity currencies anyway have been having a bad month. How are you looking at the rest of this Asian or emerging market currencies as well?
Manisha, volatility is likely to step up, and the volatility as it is not really at a very comforting level, but it's likely to jar the nerves of FX traders even further. And as far as the yen is concerned, I think it's likely to remain in a tradable range of, say, 80.90 and 79.25, although that sounds like a broad range, but that's where I see support and resistance is at.
Vijay, coming back to the Indian rupee, of course, the near term is looking bearish, but many people feel that once the June is done and you have done with those oil import payments, there could be some stability coming into rupee. You are looking at that range of 56 to 52 as well on the better side. I mean, slightly longer term, if the importers and exporters are watching the Indian unit, would you say that that's a safe range to work with?
I think so, yes. I think the rupee is depreciated rapidly and sharply enough. There should be some kind of a corrective action here. I would actually think the rupee may not touch 56 without a correction. There might be an intermittent correction before the rupee could go to 56. And therefore, I have been suggesting buying on slight dips. I think you're right about your assumption that your oil import payments, etc., would play a part here. And in the month of June, hopefully, the volatility will actually compress and equilibrium would come into the market.
All right. So some consolidation could be coming in once the import payments are done. Let's also get in Mr. K. Harihar. He's Treasurer, First Rand Bank, and he joins us on a Mumbai phone line. Mr. Harihar, hi. Welcome to the show. Another record lows for the Indian rupee. How are you looking at the trajectory in this week itself? How do you see a weekly closing now for rupee?
Okay, if you look at yesterday to today, while we did have a weakening happening and rupee did go to the 60 levels, it's closed back on a day and below yesterday's. So taken by itself, I think the rupee at since it's touched the previous record of 54.30, these are levels where the exporters should have been coming on an ordinary basis because their targets have been achieved. These are the levels that foreign investors should have been coming in. But clearly the risk-off situation that's kind of been enveloping the world, and also the developments that have been happening today and which will continue to happen in the next few days, are going to make the dollar very, very strong in the international market, and the euro probably already below 27 will probably look for lower lows. Now that's going to clearly cast a kind of global view, a global negative view on all the currencies. So my only fear is left to itself, the exporters would have come back if the rupee had consolidated at 54.50 to 55 levels. But if there are these overseas cues and there is a disorderly kind of situation happening in the Eurozone, especially with the weaker boys, today we have Spain, there are rumors of a possible downgrade in Spain, and the contagion could go on to other states, then that can keep the rupee under pressure. But having said all this, I think every importer would be a bit more worried buying at the all-time high. So my sense is more and more people would have covered and the stragglers would have been there. But the real move in the market will come when the exports which are completely lying aside and are not booking themselves. When they come in, only then will you see a big reversal.